Good morning, traders, and welcome back to It's Crypto's trading channel. First of all, Happy New Year to you all. I wish all of our followers and clients a prosperous 2022. I know we are ready to make some gains, so let's get straight into it here. We're going to perform a multi-time frame price action analysis on the situation we are currently seeing on NearUSDT to show you guys how we are going to be potentially capitalizing on the next trading opportunity with students. As always, we'll keep this video as educational as possible. So this is a solely price action analysis starting here on the monthly time frame. So here we can see the price is in a strong uptrend. We have a series of higher highs and higher lows, and the market has recently broke above this level of resistance with this nice monthly impulse to the upside. So on the monthly time frame, we are bullish. Although one thing we can also see here on the monthly time frame is we are overextended and we could well see a correction to form a new higher low here. You can clearly see the uptrend, and it is highly likely after this impulsive move that we see a correction and new higher low form around this area. If we now take our Fibonacci from the low to the high of the monthly impulse, we can see the 0.618 and the 0.5 fib lines up nicely with this area of previous resistance here. So this area all across this zone here was clearly previous resistance. We have 3 wick rejections, and as you know, when an area of resistance gets broken to the upside, this area usually acts as support all across this zone. And 9 out of 10 times the market will go and make a retracement to retest previous resistance as new support before then making the continuation to the upside. And that's exactly what I expect here. So although the monthly time frame is bullish, we do expect a correction to this area of support before we see the continuation to the upside. Let's drop down to the weekly time frame. So here on the weekly time frame, again, everything is clearly bullish. The market recently broke above this area, which is the same area I've just identified on the monthly time frame. However, we can see that price is rejecting this level of resistance, and as I said, we are clearly overextended. One other important thing that we have to notice here on the weekly time frame is the market has printed this beautiful W formation. You can clearly see this very easy to see overextended W formation here. And generally speaking, when the market forms an overextended W formation on higher time frames, the market likes to complete the pattern at the neckline, which is previous resistance turned support. And the market has not yet completed this pattern at the neckline. Let's just delete everything a moment so you can see things clearly. We have not yet complete the pattern at the neckline. The neckline is at this zone here, and this is the previous resistance turned support zone, which is also resistance all across this zone. You can clearly see this is a very strong level of structure with multiple rejections at this zone. Again, if we take our fib from the low to the high of the impulse, you can see this zone lines up perfectly with the 0.5 fib, and we should see a correction come into this area of demand before we see the continuation to the upside. Also, here on the weekly time frame, we have this candle here that still has 13 hours and 20 minutes left until closure. But as you all know, if you follow our videos, when the market forms a candle like this with a large bearish body and a large bearish wick, you can expect the market to fill in this wick. This is a highly probable pattern within the market, and this does play out a lot of the times. So, as I was saying, quick recap, monthly is bullish, but we expect a retracement to form a possible new swing low. The weekly, again, is bullish, and we expect the market to complete this W formation before we see the continuation to the upside. Let's drop down to the daily time frame and see what we can see from a daily perspective. So here on the daily time frame, the market recently made this daily impulse to the upside, followed by a correction. Now, at this point, it was highly likely that we did see the continuation to the upside. However, what we can see is the market did begin to make the continuation, but it failed to make a new higher high here. So you have a higher high, and then the market attempted to make a new higher high and failed here, and instead formed a lower high. So this could confirm the change of trend on the daily time frame. Because obviously this is a failed high here, we could now begin a corrective trend, something in the form of this here. We could see a bearish channel, a bearish corrective channel, or a falling wedge here into this area of demand, into this W formation neckline, which I've already identified, before we then see the continuation to the upside. So how are we going to be potentially looking at capitalizing on this? If we drop down to the 4-hour time frame, let's delete that trend line for now. Here on the 4-hour time frame, everything is very clear. The market has just rejected this level of resistance. So we have a clear level of resistance here. We also have a very large head and shoulders formation here, with the left shoulder, the head, and the right shoulder. Sorry, ignore my terrible drawings there. But you can see the head and shoulders nonetheless. And obviously, this is a bearish reversal pattern. We also have very strong rejections. We have a higher high, a lower high, and again, another lower high here. This is where the market is losing bullish momentum. And you can clearly see we are now forming the downtrend, which I just mentioned here. This is a possible downtrend. What we can also see here on the 4-hour time frame is we have a clear level of structure all across this zone. So we have a clear level of structure all across this zone. We have support here, resistance here, support here, support here. So you can clearly see this is a very strong level of support that the market does need to break below. What we can also see here is this level here. This is a nice level that we can identify. We have previous support here that's turned resistance here. Now the market is currently breaking below this zone. So this zone was previous resistance that should have acted as support here, but it is failing as a level of support. So we have a clear failed level of support here. So if we break below it, which I do expect, this 4-hour candle has 1 hour and 20 minutes left. If we break below this area of previous resistance, previous support, sorry, then it will be new resistance at this zone, and the market will likely go and retest this zone before we see the continuation to the downside, and the market potentially go and complete the W formation at the neckline. So what we are waiting to see is a 4-hour close below this area of resistance here. If we see a 4-hour close below this area of resistance here, as I said, this is strong support all across this zone, and we are likely to see a rejection at this zone and the market to come up and form another lower high here. So then we will have 1, 2, 3, and the possibility of a 4th lower high here. This will for sure confirm the new short-term bearish corrective trend. And we also will form this very small head and shoulders formation here if this does play out, if my projection does play out. So you can clearly see we have a lot of bearish confluences in the shorter term here. So what I'm waiting to see with students, we are waiting to see a 4-hour close below this zone here. Once the 4-hour closes below this zone, we will patiently wait for a retest of this previous resistance, which should have acted as support, which we broke to the downside. So once again, it will act as resistance all inside this area. And all inside of this area is where we will be looking for a potential shorting opportunity. Obviously, the market could easily break back above this zone, so we'll be waiting for confirmations all inside of this area with students before we look for a potential short opportunity. In regards to our target profits, if we take our Fibonacci from the high to the low of this corrective move, this is an impulsive move to the downside, this is a corrective move. If we take our fib from the high to the low of the corrective move, we can see the minus 0.272 will be a nice downside target, which is very close to the W formation neckline. So we will obviously identify this zone on our chart and we will look at taking partial profits along the way. Bear in mind, we do have to see entry signals according to our strategies all inside of this area before we can possibly take this potential shorting opportunity.